to see you, Liam.
It's all relative, Steve.
Yeah, I tell you, this isn't far off the Bank of England's inflation target.
It isn't. It's 2.3%. So over the last 12 months, prices have gone up on average by 2.3%. That doesn't mean they've come down. They've gone up, but just less than they were going up. Back in October 2022, annual inflation was 11.1%, a 50-year high. As you say, it has now come down towards the Bank of England's 2% target. Why has it come down? It's come down because we've had lower utility bills, or we've had fewer increases in utility bills. We've had a reduction in the Ofgem energy price cap. Food price inflation has come down as post-lockdown supply chains have managed to reboot themselves. It's still above the Bank of England's 2% target, and that's why when the Monetary Policy Committee meets on June the 20th, the 9 economists at the Bank of England who decide whether interest rates are going to move or not, I think they're going to keep interest rates, Stephen, at the current 16-year high of 5.25%.
Really?
So no interest rate cut next month, in my view.
Right, interesting. That would be disappointing, I suppose, for a lot of people. But, I mean, the year's not done. Maybe we'd see them later in the year. Who knows? What's the sort of mood generally, economic sort of picture-wise? We had a very short, sharp recession, which the Chancellor will be pleased about. Yep. We've had economic growth better than America and Germany and France, so lots for the government to be crowing about. Will they be happy with this morning?
The government will be happy because it shows that inflation is definitely on a downward trend. From 3.2% last month to 2.3% this month is a big sort of proportionate fall in inflation. But then the opposition will say, well, what's inflation got to do with you? Inflation's all about how the Bank of England sets interest rates. That's why the Bank of England is independent, because politicians aren't meant to mess with inflation because they always mess it up. That's been the history. That's why we've got an independent Bank of England. And as you say, Isabel, there have been estimates coming out most recently from the International Monetary Fund that rarely does the UK any favours when it comes to forecast. They are actually saying that the UK economy is outperforming some of the other large G7 economies, not least Germany, Italy, growing about the same as France. Look, but these are still tiny numbers. Yeah. The economy has still not really got out of second gear since lockdown. Indeed, I would say, since that global financial crisis back in 2008-9, we seem to be stalling. The government obviously will be hoping for better economic news in the run-up to an election this autumn. And I'd say that they'll be hoping for at least 1 or 2 interest rate cuts yet before a November election, as well as another tax cut.
Yeah. But is there a sense with this that the Monetary Policy Committee are going to be looking at other factors rather than just inflation, sort of more underlying factors?
Absolutely right. They'll be looking at wage inflation, and wage inflation is still high. Real wages, that is wages after inflation, are now growing quite strongly, and they'll be worried because higher wages, of course, that's great news if you're at work, but that increases the costs of firms. Firms pass on those costs, of course, and then that feeds through into the prices that we pay in the shops for our goods and services. As well as wage inflation, the Bank of England will also have its BDI, or 9 of its BDIs, or 18, 9-strong Monetary Policy Committee on global energy markets, commodity markets, particularly oil and gas. As I often say here on GB News, geopolitics is really important. All that turmoil in the Middle East, ongoing turmoil between Russia and Ukraine, it spooks oil markets, it spooks gas markets. Any flare-up in geopolitics, you can see that feeding into energy prices. They could spike, and that would feed into inflation. So this interest rate cut, I think it is on the way. It is on the way. I don't think it will happen next month because we're still above target, and we may yet get 1 or 2 interest rate cuts before an election.
But is there still an issue with the Monetary Policy Committee in the sense that, I mean, they can turn around for this and say, well, our plan has worked then. We've kept prices high. Everyone's been squeezed. Some people, squeeze till they squeak on all of this. And yet there's still that big argument to say, actually, this hasn't been the right policy. This high level of base rate is not what's brought inflation down. Are we sort of feeding the beast with this?
There's definitely a debate going on about the Bank of England. Nobody in government, nobody in authority wants to have a debate about the Bank of England when the Bank of England is trying to get inflation down, because it looks as if you're trying to move the goalposts. You're trying to blame the Bank of England, and that will be a kind of downward spiral. But there's definitely a debate ongoing. Should the Bank of England stay independent? Did the Bank of England, was it asleep at the wheel? Was it too slow to raise interest rates? Well, putting my reporter hat to one side and being a columnist and analyst, I've been writing, throughout 2020 and 2021, people like me, there were a few of us were saying you have to raise interest rates sooner. Inflation's coming down the track post-lockdown. The Bank of England didn't listen. Inflation will be transitory, oh boy, don't worry about it. That turned out to be wrong. The Federal Reserve and the states got that wrong as well. And because they were too slow to raise interest rates when inflation was going up, I personally think they've been too slow to lower interest rates with inflation coming down. We've had 13 interest rate rises. They take months and months and months to feed through. The impact of previous interest rate rises is still in the system, even though inflation's coming down. If I was on the Monetary Policy Committee, I'd have cut months ago.
OK, interesting. Well, this is at 2.3%, the lowest it's been since July 2021.
Yep.
And don't forget, when Rishi Sunak became Prime Minister, inflation was at 11%, and he did manage to achieve, it wasn't his work solely, but the pledge
He's hitching his wagon to it.
Yeah, he has, 100%, and he wanted to halve it by Christmas, and he did. We've got comments in from the Treasury and from Rachel Reeves this morning. The Treasury saying we rightly protected millions of jobs during COVID and paid half of people's energy bills after Putin's invasion of Ukraine sent bills skyrocketing, but it wouldn't be fair to leave future generations to pick up the tab. That's why we must stick to the plan to get debt falling. The economy is turning a corner with strong growth this quarter and inflation close to target, allowing us to cut taxes for the average worker by £900 a year.
Well, as political messaging goes, the key phrase there that will be repeated ad nauseum by Conservatives up and down the country, the economy's turning a corner. The real important aspect here for politics and for the lives and livelihoods of GB News viewers and listeners, and indeed all of us here in the UK, is are we going to feel that the economy is turning a corner? That's the crucial thing. And I have to say, when I talk to lots of people, get lots of emails, lots of messages, many, many people out there do not feel any of this recovery. They are still struggling. And that is the challenge for the government. It's the Ronald Reagan question. Do you feel better than you did 5 years ago?
Yeah.
And for a lot of British people, I'm afraid they're going to say no.